Hello traders, good afternoon, happy Monday, wonderful week to all. Please give me some okay, that you can hear me. Wonderful. So, how are you guys? Catherine, welcome back, dear. How are you? I hope everything is better for you, for everyone around. How are you guys doing? How was your weekend? I hope everything is fine. The UFC fans should have enjoyed some good UFC fights. So everything is nice. So let's begin. We have a busy list for today, several very interesting opportunities, including the one that you see on the screen currently. Nasdaq and generally indices, very important week for them. So let's start. We go with the Forex first of all, and the Euro pairs, the first to start with. By the way, for all those who are here for the first time, welcome to our family. First of all, this trading report you would receive after the live rooms once it's ready. This video explains how to use that inside the table. You have all the most important webinars to watch at your own pace, your own comfort. Okay, don't feel like rushing. And this is our watch list, what we are looking to trade and how. So what you have to do basically is click on any of the images. It opens the chart for you. Okay, something like that. And you would each of the instruments, yeah, and it opens the charts for you so you can work with that. Below you find the explanation. So this is briefly a summary of what's discussed in the live trading room. It's not a replacement, it's a summary. So based on your availability, make sure to watch the live rooms. All the explanations are best to watch and understand. So let's start. The euro dollar is our first one. We are bearish. Simply for the reason of the weekly cycles, as this was a triple on the first push, and this is the second leg developing. Looks like one more low to come. Now the looks like here basically comes also from divergences. The last divergence still in play from the weekly is bearish, hidden. Okay, that's the bottom line. The last one is variable. So yes, there was one at this place, but if that's to be a valid divergence, then the last place here of the daily normally to be divergence by itself on this leg, right? And we don't have divergence here. And the daily also became a bearish hidden. So 1 plus 1 normally is 2, right? That's of course just a metaphor. Don't go and check when it's not 2, it's always 2, but just for a metaphor. So we are bearish. Now on the lower time frame, there was one thing that we have to pay attention to, which might be against this view. The fact that the euro dollar on the lower time frame pushed upside in 3 waves, making it triple high, triple low to the upside. In many cases, that's a beginning of a bullish trend. Now, again, we have some controversial signs between the 4-hour and the higher time frames, and that's exactly the place where we have to be careful. So what could happen here is 2-wave push, which currently happens, right? Bullish hidden divergence, which currently happens and is suitable because of the structure of triple high, triple lows going to the upside. We might, if the euro dollar really struggles to break through and holds this area, right? If it will manage to hold it, there is a good chance for a reversal. As for now, we do not have any reversals at this stage. We did have our 4-hour chart trendline breakout. We did have the 1-hour chart pushing in the structure of the lower lows after the fake breakout, right? We get a false break here, confirmed, we get a breakout. So again, technically everything is bearish. We will need, and we don't yet have to be worried about it. Pay attention to the possibility that this area would be blocked, and if it will be blocked and keep fighting here, this would be a suspicious sign. At this stage, the pressure was and remains bearish, and our cycle level based on the weekly time frame would be around the area of 110. So much psychological area of 110. Okay. By the way, another fact that keeps the main pressure still bearish is the fact that if the weekly was about to end, then the daily would try to create false breakouts with higher highs, or at least some beginning structure of a rally. And the euro-dollar refused to do so in all that plays. Right? So maybe the bulls are really weak. So we remain bearish in our view, and as for now, our invalidation plan would be this trend line, this mini trend line connecting the two highs. Of course, it might go and be updated later on. At this stage, this is the only thing available. So while below it, the pressure remains bearish. Euro versus the pound is the next pair on the list. We are trading long-term bearish movement of a triple cycle. After triple cycle, we expect a corrective cycle. Corrective cycle could be in two variations: one double wave or a range, meaning we might be get a false break here, get a false break here, and move inside that somehow like that. All right. So meanwhile, the pressure is bearish, no bullish divergence on the weekly chart. So for the longer term, the view was and remains bearish. The only thing here is that the short term is currently against the longer view. The daily is bouncing from the 61.8, right? Holding it with Harami. We got here a Harami pattern. Pretty beautiful. The way I love to see. Basically, we have body inside body and spikes inside spikes, and it's not just empty candle. It's a very nice body of the green candle. Now we do need to pay attention to that, as it also suggests a bullish divergence, meaning 4-hour chart, right? Because the next time frame to the daily cycle is the 4-hour chart. In such case, the 4-hour chart will have to be cycled by itself on each of the daily legs, which it was. Let me just choose the right tool to draw with. We have it up to here. Double cycle. And just redraw it correctly. We have it here. And divergence accordingly. And we have the second leg with its own divergence. So the short term suggests a possible correction. Correction, as we mentioned before, could be in two waves or a range, meaning 1, 2, or a range. So we can see that moving in something like that for a while, right? Before future continuation. That means on a very aggressive approach against higher time frame cycles, It's this trade could be traded on the move upside. So that's something that probably could happen, right? If the 4 hour to suggest two waves, then each of its waves to be cycled by itself on the 1 hour and play around this zone, right? Why it's risky? Because 4 hour chart has two variations to be corrected, two waves or a range. So the 4 hour chart technically, let me just go back to the 4 hour. The 4 hour chart technically could do anything like that at any time it wants, right? And that's where the risk basically comes from. So short-term rallies and retraces upside are possible, are very welcome. We, based on the daily cycle against the weekly, want to see 4 hour to become corrective, meaning making clear two waves, right? And then we will be start looking for a possible sell opportunities. All right, so this is for the euro versus the pound. Next one, euro versus the CAD. A quick reminder, for the long term, we are bearish due to the triple cycle. So we are looking to trade 1 and 2. This is a monthly chart, so very long term. On the shorter view, which is the weekly time frame, we got ourselves here a triple cycle down. Then we got a false break on the bottom, false break on the top, which makes it a range. And inside the range, we want to see corrections before we sell again, right? This is the plan. Now the daily chart inside the weekly range provided us this double cycle with a bullish divergence. Each of the legs from the daily chart was a cycle by itself on the 4-hour chart, right? Then we got a correction. The correction cycle was a range. And then we got this beautiful triple. So we are after corrections, right? On the short term, daily double cycle. So basically we are heading towards the 38.2. Now keep in mind the daily might be also broken into a triple by itself. So we do have a possibility to aim also to the 50%. So the short-term view, which we started from the previous week, was and remains bullish. The 4-hour chart has to be a corrective cycle, which means two waves or a range. For a range, we do have a false breakout, but we also require to see another false breakout here in order to be able to continue this way. And as for now, there is no divergence again this pair, like an ending cycle to the correction. Therefore, the EuroCAD on the short term could still simply push it higher. Once this becomes a classical divergence to end the corrective cycle, then and only then we start to look for possible sell setups. Okay? Little pullbacks like we had since Friday started, right? Ended with a top, then little during the beginning of the weeks made a move down, could provide the little short-term buy opportunities for continuation. Once again, this is for the short term. Once the daily makes its correction towards the required level, 4-hour chart confirms the corrective cycles, this would be time to start looking for the next turnaround and sells. Okay, good. So enjoy. If you are already holding your buys here, enjoy. Just remember to manage. Okay, when you have the signs against, very important thing to remember for short-term traders is when you have signs against, right? And when you trade against the higher time frames, respect that. Okay, it's very important to remember that traders logically and naturally fall in love in the positions, right? Tend to forget the bigger time frames. Normally, that's where the problems start to begin, right? And it's very important not to close the eyes to reality, but to respect the reality. And the next one and the final one we have is the euro versus the Aussie, final one of the euros, I mean. And this is what we are trading. We are trading the triple cycle from the weekly chart. We could have here that, of course, could be measured this way as well. Doesn't really matter, doesn't really change anything. The idea is the same. So we are after a corrective cycle, meaning 1, 2, or one falls back already on the top, so we might be dealing here in some big range. So this is the big picture we have. Now, since this is the weekly cycle, daily should fit in, correct? The daily, due to this spike, happened at the very beginning of this year, right? Starts from end of previous year to the beginning of this year, after the crazy clearance the Australian and the yen pairs had. Basically, it ruins the count for clear cycles. Theoretically, it has a double wave push here, which also could be broken as a triple. Once again, this one candle ruins the count here. So the idea is that the daily did the push downside with few dropping swing highs and lows. Since then, we got a false break on the bottom and false break on the top, which makes it a very possible ranging scenario. Now, after the first move down, we can be exposed to two corrective cycles, two waves or a range, right? Both scenarios are still possible here. We might be exposed to this double wave, which is still in play, and that could be also holding the top of the range. This or other way around, it doesn't change anything because we are looking for a sell continuation. The sell continuation should be coming from 4-hour and the daily combos. So if it's a 4-hour chart and the last trend line available is this, we don't really have any alternatives as false breaks or anything like that. We might be getting a false break here with divergence, and then we can, of course, look to trade a different trend lines, right? But at this stage, at that time being, the last trend line is here. If it will be managed to be broken, sell the rallies is the plan. If this trend line is holding and we push slightly higher, it would be even better scenario, because by ideal, this pair wants to clear this high. Why? Because there is a lot of stop losses. There are a lot of stop losses located right here of the early sellers. Most of the times, not many, most of the times, the market is cleaning such levels before continuing. So by ideal, we would see that cleaning, recreating the divergence on the 4-hour charts, and boom, attacking the sells, right? But we also have to remember that if the bears are too strong, then after the break of this trend line, we would be looking to sell the rallies. So our long-term plan here is sell setups only. Okay, that's for the long-term view. Any questions about the discussed euro pairs before we move on? Wonderful, no questions. Now let's continue. Now there is one more I want to to show and discuss the euro versus the yen, which is currently making some kind of correction, which is very welcome, of course. But we have our level slightly higher of the cycle. And I would not be surprised if this is what the pair will try to do before any move lower. The reason for that is the fact that the last divergence available from weekly is still bullish, and the last cycle developing is still corrective upside. Now, this is as it develops. The 4-hour chart, the daily does starts to show a possible divergence already, though, right? We are missing the cycle level. Divergence starts to appear. So the 4-hour would best create false breakouts for us and lower lows, and we are missing it yet. The current low to be broken in order to validate, that's the first false break, that might turn to be the second. So the last available low for a breakout would be right here. But even with that, when you check for divergences, there is no divergence, right? And that's where the setup normally starts to be very, very, very tricky. I would not be surprised if the daily, the 4-hour chart would just try to create a bullish hidden divergence for a continuation upside. The 1-hour chart, if the 4-hour would become bullish hidden, then the 1-hour chart should make clear two waves with a bullish divergence. The way the 1-hour chart currently is structuring is a triple push down, which means we can expect two waves up and one more drop. After this drop, we should be looking for the divergences combos. If they happen, we have a long. Okay, this is for the short term. Personally, for the longer view, I would prefer, of course, for this cycle to complete, to end, create here the setups we love to see so much, and start looking for the sell. That's personal preferences. That's why the euro yen is not on my list at this stage, but definitely worth to follow during this week. Let's continue. Pound dollar. Our long-term plan was and remains bullish according to the weekly and the monthly cycles. So we are trading this second leg right now according to the triple double scenario. Okay, that's for the long view. On the shorter view, the daily had double cycle for us. At the beginning, at the end of the previous week, it managed to tick down. That happened basically right before the end of the week. So this tick down suggests the 4-hour possibly to become a corrective cycle. So we could be exposed to anything like that. Bullish hidden divergence for a possible continuation. If 4-hour chart creates the two waves, the 1-hour chart must verify that. And of course, when both are bullish divergences, we have the okay to go and continue higher. But here's what I want to remind you guys. I always talk about that in the live rooms. When you start to get the signs against you, don't try to be smarter than the market. Put your profits in the pockets, at least of course part of them, or at least protect yourself from randomness, meaning simply move stop loss to break even or trail your stop loss to profits, but don't let changing conditions and in the market conditions could change any moment completely randomly. You don't want to find yourself there under the position of regretting of not taking an action, right? So when you do find signs against you on 2 time frames, like we are taking weekly bullish, so daily is double cycle with 4-hour chart verifying divergence of each of the legs, that's something to pay attention to. And when the daily ticks the divergence against, which happens on Thursday, right, as you can see at the beginning of Friday, you see that, don't fight it. Don't fight it, because on Wednesday, right, and the beginning of Thursday, everything looks bullish. But at the end of the day, everything might change. So respect that when you trade the longer time frames. Check the daily. It takes 10 seconds to see where it stands. And if the divergence is ticking, you adjust your risk management of a position. Why? Because you don't want to fall in a possible scenario. Let's go with Nat's imagination. That could turn to be like a range, right? A false breakout and a false breakout. You don't want to find yourself in the middle of the way down all the way to the bottom of the range. That's a possibility. No one thinks it's going to happen at this stage, but that's always a possibility in a technical analysis. So when you are running your trades and your profits, do not let that go for a randomness. Manage. It's very, very, very important to be there and pay attention. So the long-term picture does not change, did not change. What the only thing that we are looking from here is the corrective cycle and continuation. Same exactly happens on the pound versus the franc. Nothing changes for the long term, but the daily currently is against the longer time frame cycles. And the 4-hour, no, why it's not changing here? And the 4-hour suggests a short-term reversals by itself. So corrective cycles are acceptable, and we will be looking for them to complete and looking for future continuation upside. Okay, so that's pretty much what happens for both of these pairs, and it's pretty much the same. They are too close to each other. Now here is the one I want to update, and this is the pound versus the Canadian. We are bullish from the previous week. If you remember, this was our discussion. So what did we have since then? A straight push, direct target achieved, then we get a correction and a bullish hidden divergence, and the top of the channel, the daily channel, achieved as well. Now here's the thing. We do not have cycles to rely on, therefore we do not have levels to rely on from the higher time frames. Without levels, we must be paying attention to the price action structure. Current movement of this pair was and remains inside this range. Channel, tunnel, megaphone, call it as you wish, it doesn't matter. Both daily and 4-hour starts to show possible, I say possible because we didn't tick, a possible stoppage or at least fight. They both starts to show the divergences. 4-hour also does that with a cycle. So I think the area of 176, 177 is a very critical area, and I don't think much of the buys left here, at least for the short term. So personally, I move to neutral from bullish as we were on the previous week. Since here, quick reminder, moving to neutral. Again, when two time frames starts to show warning signs, not fighting it, respecting it, and GBP CAD, I become neutral. And the last one of the pounds, sorry, one before the last one, is the pound versus the Kiwi. Now the long term of ours still remains ultra bullish, as you know. This is what we are looking to trade. Daily chart, however, same story, possibly making here. I say possibly because we have no idea when the MACD is going to tick down, right? Possibly suggesting here a divergence. If that's about to end this way at the end of the day, 4 hour to suggest a corrective cycle. So that could be 1, 2. That could be any kind of a range or any kind of ranging structure. We can't ever predict, and we don't need to predict how it's going to move in what of the range types. We don't need that. But if the daily ticks down and the 4 hour chart has its own signs against, we have to respect it. So on the shorter term, yes, we might be exposed to any kind of corrections. For the long term, our plan was and remains bullish. Meaning, if you are running with the buys that we were talking about after the break of the trend line, and you manage to find your entries here, somewhere at that moment, place here, and now you are facing such signs, possibly to be against, right? And at the end of the day, the divergence might tick. This is the time for management. It's partial. It doesn't matter what kind of management, whatever fits in your risk management strategy. But actions have to be taken. Why? You don't want to leave good running profits to the randomness of the market. As simple as that. Remember, at the end of the day, trading is about making money. It's not about being right. It's not about building up an ego. It's not about getting certifications or to get compliments or develop your good feelings. It's about making money. Analyzing is about building an ego and your success rate in your analysis. For trading, we have completely different goal. Our goal is to make money. All the ways are acceptable. Well, besides cheating, of course, all the ways are acceptable. So when you do have the signs against you, don't try to be smarter than the market. Apply your management strategy. Gord, pound CAD, you say weekly bullish breakout of what? My beginning was, my analysis was from previous week based on this channel. I don't really see any structure of cycles here, so that's why I don't know. Based on the channel, we're in. Based on anything else, to be honest, I don't see. Well, weekly also has higher highs and higher lows, yes. So theoretically, of course, it has room further. And no real divergence against. But on the shorter view, based on the one I was relying on since the beginning, we have the signs to cash out. Again, only my view. Of course, according to weekly, it might go and continue higher, but it paid pretty well, so I wouldn't leave my profits untouchable. So that's for the pound pairs. One more to cover is the pound versus the yen. And this is what we have from this pair. Last divergence was bullish in this triple cycle. We pushed all the way to the 50 of this trio. And now it's a situation which I love to see, and daily is coming to the cycle level. Very, very, very close to that. Right? Divergence starts to develop. So this very likely to start and be some fighting zone. So again, retraces are acceptable. That's definitely a possible scenario. Two waves or any kind of a range movement here. And again, by ideal for the longer term, since we are coming from the weekly cycle, by ideal we should be exposed here to some kind of fake breakouts before the main turnaround. So short-term retraces are acceptable. I believe they would provide us some new high, and then very likely we should start be exposed to possible turnaround and for sales. At this stage, only short-term retraces. Okay, nothing for long-term yet available for one reason. 4-hour chart does not have any false break, any lower lows, any lower highs. So every trading at this stage is acceptable for short-term and short-term only. After that, I would expect one more high, fake breakout, ideally by cleaning this area, more ideally by creating a moving average divergence. After clearance, it's sugar. We will see how it develops. So basically, as for now, short-term retraces and continuation upwards is expected. So that's for the pound pairs. The next one on the list, Australian dollar. My long-term view was and remains bullish. I'm in this special cycle. False break, bullish divergence, bullish kicker pattern, which I love very much so, this green massive candle. Weekly chart is a triple cycle by itself with a bullish divergence, meaning we would expect this. So too many long-term bullish signs. The daily has to fit in. The daily has still two variations to apply here. Little range and a turnaround, or simply too little two waves until we have a bullish divergence and then the buys. Okay, so what do we have in that case? If it's double cycle, each of the 4-hour chart legs to be a cycle by itself. If the first one provided this special, then the second one might go and provide here some double like that. So by ideal, one more low divergence, what we would want to see here is the turnaround, right? So we do want to see some stoppage, double bottom, false break, any kind of scenario, higher highs, and then we are after the buys. So little further bearish pressure is acceptable. For the long term, we remain bullish. And same exactly with this monster Aussie franc. This is all happening here from this trio. For the very long term, we are very, very bullish here. Now, the weekly chart, last divergence in play is bullish. The only thing happening currently against the higher time frame is the fact that the daily was against the weekly and the monthly cycles. Therefore, daily to be corrective, to waves to be developed. 4-hour chart to provide a cycle by itself on each of the legs. Not even the first one here isn't a clear leg, and that's what makes me think that we are developing here now a second deeper movement down. So I would expect the Aussie franc to make this new low until it becomes a clear divergence. Okay, and only then start looking for further buys. So short term, bearish pressure for the Aussie franc. Once it's stabilizing its divergence, as just explained, we would be switching to bullish. So Aussie franc is basically a new addition to the list. Commodities, gold and silver paid amazingly from previous week. They were massive and very, very, very bearish on the shorter view. I still think they are in corrective cycle, so I wouldn't change any of the views. This is a bearish cycle. We had a false break, we had a false break. We have a divergence, we have the lower lows. Now corrective cycle. Corrective cycle could be two waves, or we could play inside some kind of a range here. How exactly would that be developed, we don't know, but sell the rallies is still the better plan. On the very short view, this is what's happening. We are building up here likely some kind of special cycle, triple push idea, which means once this becomes a divergence, we should be starting to get these rallies. After that, very likely to play in a new bearish momentum. Once the daily completes its correction, and I want to remind you, the daily has to be the two waves or a range, right? And we're still only in the first leg, so that's going to be a long journey here. And then we will basically switch to buy silver. Same exactly, short-term bearish. Our expectations for double cycle, or for that to become a range. How exactly will be that developed, we don't know, but the plan is 1-to-1. That's that case, like the gold. Oil. Whoa, what's this line? Oil, bearish. Basically, we get ourselves here the double cycle. 61.8 is respecting. I still would prefer to see a clearance, like a spike through this high for the bearish movement, and that still could happen. However, the levels are wonderful. We already are exposed to a false breakout here. So from my point of view, oil is good to start looking for sells, and that could happen from any moment from here or after one more fake high. Everything is welcome. Our goal is looking for sell setups, so we are bearish, and after the sell setups, the expectations are double wave correction or range, so that we could get this, or we could be playing inside a little range, this or other way around, corrective cycle, meaning sell the rallies, even if it makes one more fake high, no problems. We are after sells here at this stage. And indices, is that time? Well, still don't know to say, but let's start with the Nasdaq. We are kissing right now the 61.8. Beautiful clearance area, you see? Catches all the stop losses around this place. That might be a very powerful engulfing at the end of the day. We still have several hours to go. We never can predict how a candle will or will not finish. It looks good as engulfing. We do want to clear this low to make the convergence idea, convergence principle, or full convergence become relevant. We have several false breaks on the place, and then we are switching to bearish view. Okay, this low, we do want it to be broken. And same with the German DAX at this stage. That's, whoa, sorry, chose the wrong tool of the pen. That's our trend line. This is our false breakout of this high. This is our low. Break below that would verify very likely a trend continuation, and we will switch from there to bearish. Follow that. It's beautiful, it's interesting, and it's happening. And as per the only stock we are holding for the long term, no changes. We are here after this massive triple cycle. One more low would be very acceptable, like one more false break to the area of 5 or so. But for this is what we're trading, triple cycle. With that's a huge investment and huge opportunity here. So for us, Deutsche Bank is the only one in play. As for now, only as invest. And that's pretty much it. That's all, guys. That's my list for the beginning of the week. Any questions? We have pretty great opportunities forming both short term and the longer term. So really Curious to see what opportunities we will face during the week. Keep in mind, this is non-farm payroll week. Extra care and extra cautious is required here. Okay, guys. Okay, I'll see you in the Telegram groups a bit later. Thank you very much for joining, for watching, and I wish you a wonderful trading week. See you in the groups. Ciao for now.